Now, the US will release its consumer price index today, a chief indicator of the direction of inflation there. Investors will be waiting to see whether a downward trend continues, restoring confidence further in the markets, or whether stocks could plummet after worse than expected figures. So let's get a prediction then, shall we? I'm joined now by the bureau chief of the CFO Journal at the Wall Street Journal, Nina Trentman. Very good morning to you. Oh, goodness knows what time it is there. Very late night for you, but thanks very much indeed for joining us. So what are we expecting from these inflation figures? There seems to be a certain amount of optimism around that the rate of inflation will continue to fall there.
Yeah, the expectation is that rates will the reading will show a decline again, following two declines in recent months. Investors were very optimistic here in the US today, with all three indices closing higher, which of course comes after many readings in which CPI inflation was very elevated. We saw 9.1% in June, and then in October, 7.7 and 7.1 in November. So investors are very much wanting to see this clue as to where is inflation headed, and also what would that mean for the Fed in terms of its monetary policy and potential rate rises from here. I think one thing that will be important to watch for is also not just what is inflation overall doing, but also what is core inflation doing with regards to goods and then services, because we've recently seen that prices for goods have come down, whereas costs for services have gone up. So it's interesting to see if that's continuing in the latest reading.
Yeah, interesting to look at the breakdown, but what could these figures mean for interest rates? I mean, we've seen interest rates go up steadily through the course of last year, haven't we? Is that trend going to carry on?
I think it's likely that we will see more increases from here. The Fed has signaled under Jerome Powell that they want, or that they expect, interest rates to hit 5% in March. We are currently at 4.5, up to 4.5% right now. So there is, of course, a gap between those two figures. One thing that is important also in this discussion is that the labor market is so far still holding up pretty strong. So we haven't really seen an increase in unemployment, even though we have seen some US companies, including tech companies, starting to lay off workers. And we've also seen that for banks, but overall unemployment is pretty low. And that's one of the things that the Fed has pointed to, that as long as the labor market stays tight as it is, that there is not really any hindrance for them to keep raising rates. I think the big question will be where to. So will there be a pause and a halt at 5%, or will there be even more increases, which is something also that investors will be watching for?
Well, yes, and watching not just out there in the States, but presumably around the rest of the world. How important are these inflation figures and the Fed's subsequent interest rate decisions? How important are they for the UK, for example? Why should it matter?
Well, we've seen central banks around the world follow that lead that the US has set in recent quarters. So we've seen the Bank of England, the European Central Bank, raising rates, though at a slower pace than what we've seen here in the US. We've also seen, for example, the Bank of Japan sort of slowly moving away from its ultra-loose monetary policies. So there's certainly a shift around the world away from these very loose monetary policies. And the US, as sort of the most important capital market in the world, of course, is leading that trend. And so that's something that not just only investors here in the US, but also in other markets will be watching closely. So I think tomorrow, the Thursday reading for me tomorrow, for you today, will certainly give investors around the world some clues as to where things might be headed there as well.
And very briefly, if you can, why is inflation coming down? Is it because energy prices are dropping, or is it because of the Federal Reserve's interest rate hikes?
Well, it's hard to say what's the one thing, given that there's many things that feed into inflation going up and also then coming down. But yeah, you mentioned energy prices. That's one thing that have come down in most parts of the US. And we've also seen costs for other goods coming down a little bit. Certain food ingredients, for example, And there's still, in terms of housing, for example, housing prices have come down a little bit, but rents are still elevated. So it's very much still a mixed bag.
Okay.
I guess we're waiting to see sort of if there's clearer indication as to where things are headed.
Okay, I know you'll be poring over the figures when they do come out later on. Nina Trentman, thanks very much indeed for joining us. We appreciate it.
Thank you.